session, the market will remain loose, although technically New York should try to bounce after 3 straight sessions of setbacks. China has published non-existent inflation this morning, 0%, which gives an idea, if it were reliable, of the weakness of its economy. Last week we saw signs of that profit-taking that we have warned about, but it does not seem enough to us at all because it was concentrated in the session on Thursday, only in Europe and, in addition, it was motivated by some confusing American employment data. The ADP Thursday was excellent, but on the one hand, the creation of non-agricultural employment came out unexpectedly weak, 209K, minimum since December 2020, on the other, the unemployment rate somewhat better, 3.6% from 3.7%, but it was already expected, the underemployment rate, worse, 6.9% from 6.7%, and, finally, very solid wages, plus 4.4%. That is, contradictory and confusing data. This week we have 3 important references. Canada will raise rates again, U.S. inflation will fall towards CA plus 3% and start the American results 2/4. All this will happen between Wednesday and Friday, so Monday and Tuesday lose interest. The problem is that the core rate improves much more slowly, of course, plus 5.0% expected from plus 5.3%, and that, in combination with a fairly solid economy, recent employment confusing, but GDP 1Q revised to plus 2% from plus 1.3% preliminary, the previous week, makes it inevitable to think that the Fed will raise again at its meeting on July 26 and perhaps also on September 20. Also on Wednesday, 4 p.m., Canada will most likely raise rates again, up to 5%. That will reinforce the idea, again, that rate hikes are not over, even where they are already at respectable levels. And on Friday afternoon, with almost no effective influence on the week, the start of the season for publishing American 2/4 results, starting with some banks.